Good morning. Here with news and views that you can use. It's Thursday the 25th of October and this is the Prime Cap Daily. So Mrs May has survived a vote, not of no confidence, but a challenge to her leadership ultimately. She lives to fight another day. She was presenting to a number of her Conservative colleagues reasons as to why she should remain our Prime Minister, and by all accounts, successful. Sterling has not seen a rally, so the pound still languishes at the 113.14, 113.20 mark. Whilst we wouldn't necessarily expect for the pound to rally any higher, one of the key undermining elements of the value of sterling is the question over how long Mrs May might last as head of the Conservative Party and therefore Prime Minister. The stock market saw the greatest drop that it has seen for quite some time. Why do we care? Well, coupled with a rise in interest rates, 30-year mortgages in the United States are approaching maybe the 5% mark. Now, if consumers stop spending, then you will see inflation and price rises. Coupled with tariffs that Mr. Trump is levying on countries like China, this could mean the surety and certainty, the positive outlook with regards to growth that has animated the US economy over the past few months may in fact be somewhat vulnerable, somewhat fragile. This is not played out in the value of the pound and the US dollar, so the US dollar remains above the 1.30 this morning. Sterling, unfortunately, needs an economic boost in order to get itself back above the 114 mark, or it needs light at the end of the Brexit tunnel, and this is something that we're hoping for in the next few weeks. Well, the US dollar is the global reserve currency. Now, this means that institutions, investors, countries, when they are scared or worried or concerned about what the future holds, about their own positions globally, they will look to hold and harbour and collect US dollar. And this is largely because everybody globally is prepared to receive payment in US dollar. It is the most liquid reserve currency, and therefore holding it is more advantageous or more sensible than holding a currency that only has maybe one or two markets to sell it in. In times of distinct uncertainty, so when talks break down between the European Union and the UK, the US dollar becomes the currency that investors and institutions want to hold, whether they are European investors or indeed UK investors. And so you see a fair bit of turbulence and volatility on the euro to US dollar rate and the sterling to euro rate, as well as sterling to US dollar rate. And so unfortunately, for those buying in product that is denominated or invoiced or calculated or priced in US dollars, times will remain uncertain. We're going to go into this in a wee bit more detail next week, so we'll try to look at a couple of contracts, live case studies if you will, but for now we thank you for your kind attention and we look forward to talking to you tomorrow.